Good afternoon, everyone. You're all very welcome to the weekly market roundup here at the Alpha Capital Group. So today, a very quick run through at the end of the week in what's been a fairly turbulent and volatile week for the markets. We had some very clear and very beautiful selling price action through the course of the week in the FX pairs, particularly against the dollar pairs. The dollar crosses was selling nicely. And of course, into the end of the week, we've had the U-turn. We've had that kind of weekly consolidation off the back of some fairly strong market reaction in today's NFP data. So of course we will be taking you through that as well. So I suppose first things first is really looking at the data this week broadly, and the focal point is, as we talked about kind of Tuesday and Wednesday, was going to be around Wednesday and Thursday's data. We had that midweek reversal yesterday. We started to see that kind of initial bias or trend that we saw through the course of the week, Monday, Tuesday, Wednesday, very much ending yesterday, getting those corrections, getting those retracements, and that was followed through with some fairly significant movements today in the markets. Now, of course, as I said, today we have had the US non-farm payrolls numbers. So the job numbers came out massively higher than expected. 190 was the estimate, 339 was the actual figure. A stronger labour participation rate at 62.6%, which is still holding up relatively well. And lastly as well, the big talking point is the fact that the unemployment rate, who Fed officials, if you listen to Powell's comments recently, they've been expecting inflation to go to kind of like 4.5%. And at this moment in time, although it is increasing narrowly from 3.5, 3.6 up to 3.7%, it is still holding up relatively well, given some of those macro fundamentals. Now, whether you believe this data or not is entirely up to you. All our job is to basically discuss and review the data on what's actually being released into the markets in that regard. So, as we said, obviously very volatile week this week with a lot of central bank speakers. We had a lot of data in Europe. We do German retail sales with European data broadly, harmonized consumer prices. We've had Canadian GDP, which held up relatively well on Wednesday as well. So broader dynamics, despite this debt ceiling discussion, which we've been sharing in our Discord in the institutional section, markets are holding up relatively well, broadly speaking. So I suppose really now as we head into June, a new month, is really how does the markets close into this week's weekly close, more broadly speaking. So really, without further ado, let's get looking at the price action. So this week, as we've talked about, was that kind of gradual grind higher really until yesterday in the dollar. So we were seeing kind of respective highs, continuous new highs in the dollar trend or dollar bias, which enabled the euro dollar, which enabled the GBP USD to continue circulating to those downside movements. And this is kind of where we've been Friday last week, Wednesday, Thursday last week, Friday, Monday, still holding relatively low on the downside into Tuesday, where we started to get that reversal Wednesday afternoon and then more likely into Thursday yesterday. Same again with Euro USD, very clear selling bias. We found a reversal Wednesday evening in the markets, and we've had a fairly strong reversal Wednesday and Thursday off the back of, as I said, into that NFP data today. Now, don't get me wrong, NFP data very volatile. We've seen a very swift reaction in the DXY today off the stronger that data. So it's important to factor that in as well into the broader markets, where we have seen the DXY, the dollar currency index, as an overall weighting, has significantly moved higher off of this 103.50 level. And that's a level that we've talked about obviously in previous Zooms. We've talked about it last week. And bearing in mind, to keep that in mind, should we have broken, which we have done through those short-term lows just underneath 104. So DXY is rallying back, which is enabling this change of sentiment again today. So we Wednesday and Thursday, midweek reversal. Highs of the weeks looks like it's been established here in euro dollar around 107.75, 107.80, and we are seeing euro USD sell off to the downside. So I would expect this to probably continue moving lower into the weekly close, and then it's really a case of, well, we are moving lower, we're heading back into this liquidity area down here, as you can see on your screen, somewhere between kind of 106.60, 106.80. If I was kind of really watching it closely, I would say keep an eye on that 80 level. 106.80 is really key to see whether we actually hold above this level into the weekly close this evening, because I definitely think we're selling off into that close. And then it's really a case of, do we actually trend lower? Do we continue to break through the lows, take these lows out, and continue progressing to that medium term level that we've talked about over the last week, somewhere between kind of 105 and 106 as downside targets? So keep an eye on that one. If you look at the DXY as well, we've had very strong bullish trend, highs and lows considerably. And this very, very sharp correction takes all of this shorter term order flow out of the range, out of the markets, back to this liquidity area down here, as I said, around 103.50. As I said, we have seen that subsequent bounce today. So just be wary of that into the weekend. It definitely looks like DXY is going to continue strengthening into the afternoon. It's really just a case of to see where do we establish closures into obviously the weekly market close more broadly. It's up to you whether you trade those opportunities or not. But me personally, I'm actually, rather than trying to chase some of these moves that's already happened, I'm going to actually hold off, wait and see where does the market dynamics settle into the weekend, create a bias, create a viewpoint, and start next week fresh with confidence, with clarification, and with a clear structure on where the markets are heading in terms of market directional bias. So just be wary of that. The GBP USD, as we said, we've had a very, very sharp upswing. So this bearish trend, this lower low, lower high that we've had forming for the last 2 weeks or so, found its mid-range this week. We had that aggressive initial highs taking out this range here. Aggressive move back down into said liquidity area around 123.50, and since then on Wednesday afternoon, Wednesday morning into Wednesday afternoon, we've just continued to grind higher, taking out subsequent lower high here, lower high here, lower high here, and ultimately topping out at this local area up here, just underneath 125.50. So really now we're pulling back, we're retracing, kind of like what we're seeing in Euro USD back into this region down here. You would expect cable or look for cable really to get back into this probably 124.20, 124.40 level, and there's a very nice 1 hour liquidity area here at that zone. So keep an eye on that one. I think that's something to watch into, as I said, the end of this week, Monday, Tuesday next week, although some countries have bank holidays on Monday. Just be obviously wary of that as well. Now, if we look at USD JPY, our commentary USD JPY this week has said very, very clearly that if we take out 139.50, we are heading for this 4 hour level here. And that's exactly what's happened. We've sold off through 139.50. Very nice bearish correctional retracement back to this 4 hour liquidity zone here. And I'm just going to relabel that. That was labeled previously. And we have seen a very, very subsequent and clear bounce off of this zone now. And I think it's really a case of, can the price action take out this short-term bearish order flow? Because you've got lower high here, you've got a lower high here, you've got order flow here, and it becomes even more pronounced in the 1 hour when you see it very, very closely. So it's really a case of, does the price action take out this region, progress through 140, and really continue that trend to the upside? And that's really the focal point to be watching out into the tail of this week in terms of trading. As you see there, very, very strong 4 hour, very, very strong 1 hour reaction from this 138.50, and we've bounced off of that to the T. So the analysis on that one has played out very, very nicely. So if you've taken that trade or it's been on your watch list, very, very well done on that position, because we are moving very swiftly off of that area of liquidity. And then last but not least, before we turn to gold and before we turn to the indices to round off the week, you will also see that the Aussie, which we talked about Monday and Tuesday and Wednesday of this week in our group and videos, and obviously the deeper dives on YouTube, and deeper dives and broadly speaking, you'll see that the Aussie, which was very, very bearish, right, which we talked about this 65.80 level, 66 level being broken through here very, very clearly. We have created that bottom, we've created that V-shaped structural retracement back up, and it's exactly what you tend to look for. We break through the lows, we symbolize or initiate some sort of downside movement, only to turn on a sixpence, turn back up to that liquidity area. And that's exactly what's happened here. Very, very quick dive, increase off of 65, back up into this region, and we have almost not all the way up to 66.50. This 66.50, as we've talked about here, we have got very, very close to it, and we've topped out today at 66.38. So about 10-12 points from the 66.50 level. Very, very nice retrace. So really now it's a case of, how does the market dynamic react? Because if you're to look at short-term order flow, just isolating this little region here in yellow, you'll see that we have got back into and got very, very close to this area of interest, and we've seen the price action come off. So we keep an eye on that, not just today but also Monday, because of course if we start to tilt to risk aversion again, we start to see DXY progress with further strength, that could be a very, very nice opportunity to potentially look for short positions. So keep an eye on that one. If you look at the 1 hour chart as well, you're starting to see wick, you're starting to see consolidation up in this region. So something to keep an eye out on into obviously this week as well. I'm just going to set a wee alert at this 66.50 area, broadly speaking. So that is on the watch list as well. Now, moving from FX into the gold play, right? Because we know gold traditionally is very much affected by NFP the volatility that kind of ensues off the back of that data, the volatility that comes in the markets in terms of sentiment, and everything that goes along with it. You will also see today with that dollar strength, that DXY strength, as we've talked about here, that swift breakup of dollar strength has enabled gold prices to come off. Now this week, we've talked about this 1975, 1980 level. This area here, there's a lot of liquidity kind of swashing about at this zone. Very, very clear market reaction. We did actually get a little bit of consolidation above it, but you can actually see it here in this region. Very nice little area. Selling breakdown again. So of course, with that stronger dollar, means that gold has tilted to the downside because of the correlations, right? Stronger dollar, weaker gold, so it's XAU USD is very much going to be quoted to the downside, and that's exactly what we've seen since NFP today at 130. So you've seen that 1980 drop all the way back down to 1960, and now it's really a case of let's wait and see how we close for the end of the week in gold as well. But we've seen that very, very clear move all the way back up into this region here. So it's, as I said, it's just all about ascertaining a fundamental understanding of where we close the week to prepare us for next week. Do we ultimately try and progress higher again and take out 1980, or is this the start of the next wave of selling where we start to look at maybe 1950s breaking again, taking out these consistent lows here under the 1940 level, and then really having a pop at 1900? But to get that understanding, let's just wait and see how price action plays out next week. So that then brings us lastly into the indices this week. Okay, so indices, we talked about indices earlier in the week. S&P and Nasdaq has been very much differentiating from the other indice, the Dow Jones. Okay, S&P and Nasdaq has been continued to trend higher. We've continued to progress. We've created continuous highs, lows, pullbacks, and we've seen that market move higher. Okay, and this week's the prime example of that. We talked about it last week. That aggressive move higher, we talked even about it this week as well. That aggressive move from 4100 creates new highs of 4200 back down to the value area. Follow the same process again. New highs this week early on. We got back to the 50 retrace level. So 50 isn't actually a retracement level, it's just midpoint. So it's halfway between high and low, subsequently speaking. And we haven't quite got to the area, right? So 61.8, this area down here between kind of 41.50, 41.40 was the area of interest that I had said to keep an eye on, and unfortunately we didn't quite get down to it. We did get to 41.70, but we were a little bit shy of really getting those value opportunities, those value area moves, really before cementing to the upside. And of course today, the 50 fib has rocketed back up yesterday. We saw that very, very strong move yesterday, as we saw that kind of filtration and that midweek reversal from heavy selling Monday, Tuesday and Wednesday. And today we've had a follow-up again, whereby price action has made a new high in this cycle. So we've had subsequent highs here, here, here last week, here again this week on Tuesday, and into the end of the week, another new high in the market. So we've had 1, 2, 3, 4, 5 highs since the middle of April, which shows that the S&P at this moment in time is still very much churning and chugging to the upside. So it's all about identifying those short-term tops, getting those short-term retracements, and then angling back in for the next move higher. And the same applies to Nasdaq. If we look at the Nasdaq as well, very, very clearly in comparison to the Dow Jones, you'll even see there in the Dow Jones, just as we wait for the Nas to load up, very, very clear bearish trend really since the early parts of May. Top formation in, breaks through 33,000. Very nice angled move last week into this structural bottom. We did get the retracement back up to the 61.8 we talked about. Angled as if we were going to go lower again this week. But of course, today, with the indices rallying, with the S&P moving higher, with the Nas moving higher, we have also seen the Dow Jones move higher in sympathy. So it's the Dow Jones is really now only mitigating or pulling back against this move that took place between Friday 2 weeks ago into the week of last week, where we had that fairly gigantic sell-off from 33,600 into 32,550, so that almost 1,100 point sell-off. And all we're effectively doing this week is mitigating or pulling back against that sell-off that took place, as we said, over the week and a half previous. So at this moment in time, it really just becomes a case of where does the markets, do we see cycle tops, if there is any sort of reaction up here. So you've got a liquidity area up here just underneath 33.6. There was a nice secondary area here in yellow that's been drawn out between kind of 33,350 and 33,425, of which the price action today has broken through. So really, from my perspective now, it's all eyes to see if there is any sort of reaction from this area up here, or should we actually progress through and try and take out these cluster highs. Because if you look directly left, you've got cluster high, You've got another high, and a subsequent marginal lower high here. So really then it becomes a case of, does price action try and take all of this liquidity out of the markets, whereby then you're looking at price action really pushing back up, most likely then into this 34,200 level, where it then recycles back to where we sold off initially from the peak, which of course goes back to the beginning of May, that 1st of May sell-off where we just completely imploded from 34,200 back to 33,000. So let's see where we fold at the end of this week, and of course then that should help set a tone for next week as well, broadly speaking. Lastly then in US is the NAS. So we talked about the NAS on Tuesday, that aggressive move higher. We were looking this week to see, could we get a move back into this 13,800, 13,900, which would again be lovely in terms of retracement level, be lovely in terms of the structure, in terms of the process, but of course we didn't get there. We bottomed out at around about 14,200, so I suspect if I was to add in the 38.2 for a second, let me just click this in for the fibs, let me just add in 38.2 for a second, put this in black for a moment. We were looking this week to see, could we get a move back into this 13,800, 13,900, which would again be lovely in terms of retracement level, be lovely in terms of the structure, in terms of the process, but of course we didn't get there. We bottomed out at around about 14,200, so I suspect if I was to add in the 38.2 for a second, let me just click this in for the fibs, let me just add in 38.2 for a second, put this in black for a moment, and you'll see that we didn't even get to the 382. So that's really kind of where we are at the minute. Let me just share my screen again, folks. As we said there, it didn't quite even get to the 38.2, so that was coming in at 14,150. So it shows at this moment in time, tech stocks are being massively overbought. The S&P is being massively overbought against what has been a very, very marginalized bearish Dow Jones in comparison. So you can see how the filtration and sentiment. Now, however, we have seen a little bit of buy-in today in the NAS. It hasn't been sustained. We haven't cleared through that 14,500 level. We are just pretty much sitting at it. So we're really worth keeping an eye this week to see how does the market dynamic shift. And given how bullish the Nasdaq has been over the last few weeks in particular, and you see that rally from where we were at the beginning of May, end of April, beginning of May at 13,000. We are now 1,500 points higher on the Nasdaq, which shows the appetite that is there in the risk markets. And really now at this point in time, if you go back up to the daily, I really don't think there's really much stopping us going even higher. And as we talked about previously, this 14,800 to 15,000 really probably becomes the next critical level for the NAS. But as we said, let's keep an eye on how we close this week. It's all about waiting and identifying and trying to catch those short-term retracements. Really now at this point in time, it would take a significant, decent bit of selling bias to get back to this 13,800, 900 level, and we may have to start isolating. If we are to close bullish this week and we are to make new highs again, you're really looking at this 14,200 level being a shorter-term retracement on lower time frame price action, whereby we've had marginal highs, aggressive wick to the upside, price actions faltering. So if we start to falter, you're really looking at price action coming back to that kind of 14,250, 14,300 area, which does allow for a 250 point sell-off. So really just depends on the trend, right? Really just depends on your bias, higher time frame, lower time frame, and if you're somewhere in between, trying to, I suppose, marginalize, but also kind of focus on the different moving parts associated to each element. All right, and then last but not least, then is the UK indices. FTSE this week, obviously. Massive sell-off with the FTSE. We talked about it earlier on the week, Monday, Tuesday, Wednesday. Like with the US indices, we have seen that midweek reversal on Wednesday evening. Thursday, massively higher and pulling back against some of those broader trends. So just as that FTSE chart is loading, I'm just also going to load the Dax and Euro Stoxx. And I suppose we can start off with the Euro Stoxx while the other two are loading. This is really now starting to give me initial signs that the Euro Stoxx, European indices, may be starting to break down. Okay, when we look at Euro Stoxx, we've had this nearly this 2-month consolidation, really up until the end of May, up until this week and last week, in fact, where we made new lows. So if you're looking at Euro Stoxx, you're seeing that marginal up and down within these two levels, right? You can even draw it your consolidation range, broadly speaking. And last Friday, we created the first clear concrete close below this region down here. Now, subsequently from that, we did get pullbacks to the upside. We've created new lows again this week, so we're starting to see the emergence of bearish order flow. And what's happened this week is we've created this selling area up here from 43.50 down into really 43.25. down into this 4200, we've created that new set of lows, and now all we're doing is really mitigating and pulling back against this selling notion that is taken out. So what I would be focused on this week, particularly into next Monday, Tuesday, is really to see how does the market reaction play off of this zone. And you can really start to see that crossover sentiment here. Selling ended last Friday. Buying ended last Friday. Selling came in on Monday. We saw that final little bit of buying on Tuesday morning, only to really move lower Tuesday, Wednesday, into this midweek low here, as we said, around about 42.20, 42.25. And the Thursday and Friday, we have seen that rally, we have seen that retracement, but all we've done is really pull back to this short-term decisional area here between 43.20 and 43.40. So that is what I would be looking at this week, to see there's any sort of selling coming through from that zone. And if you want to even focus on your higher point, which is coming in at 43.39, 43.40. So keep an eye on that 20-point range in the Euro Stoxx to see how does the market dynamics shift, because there's definitely potential there in selling, but we just need for this wave of bullish price action really to erode, to allow that kind of runoff back into that kind of continuation of trending price action as we're talking about. So let's see how does that play out this week. There could be a nice opportunity there. If we look at the DAX, DAX is holding up relatively well. So you look at the DAX in comparison, no new lows has formed here, right? We've had consolidation through April and into May. We had the peak May highs around the 18th, 19th of May at 16,300, which is all-time highs. We've come back into this 15,700 level. I did say this week twice, keep an eye on 15,700. If it doesn't break, just be wary that the price action will most likely bounce back into the range. We haven't broken it. We did try and break through it Wednesday afternoon. We did form weekly lows this week under 15,700, but we have come back up into this range, and we are now sitting comfortably back above 16,000. So keep an eye on this short-term peak high here. If you isolate the 1 hour charts for a second, let's say for example, we are now sitting at this 1 hour peak here. So just keep an eye on the liquidity up here. There might be potential here on Monday for selling opportunities. So I would say just keep an eye on that one as well. And then lastly but not least is the FTSE. We've had that aggressive FTSE selling initially 2 weeks ago, not last week, not this week, the week before last, should I say Tuesday, Wednesday, Thursday, aggressive move into the 7500s after that break of 77s. We formed short-term tops as we talked about last Thursday and Friday. This week we've continued to move lower, Monday, Tuesday, Wednesday, forming lows just underneath 74.50. And of course, as we look at the usual narrative, what goes down must come back up eventually. And we've found that midweek reversal has been very, very clean, whereby we've had very, very clear selling price action, very, very clear bearish order flow in one direction, and price action is pulling back to mitigate that order flow. And really now it's really a case of looking at this area here. 7,600 is probably an interesting price point to look at for the weekly close, but I would even say this area here between 75.95 up as high as really 76.40. You kind of have that 30-40 point range. Keep an eye on that into the weekly close and into early next week, because there could be some very, very nice selling opportunities there. And of course, if you look at the 1 hour, you'll see it as well. Very, very clear bottom in here, and pulling back to mitigate this order flow. Selling this imbalance, downside selling imbalance, bottom consolidation, upside pullback, pulling back into this region. And as I said, I do think it'll probably go above 7,600, and I think that area here around 76.25, 76.20 into 76.40 should be something that traders watch into Monday and Tuesday. So that's effectively where we are for this week, traders. So have a good weekend. Enjoy the lovely weather if you are getting it where you are currently at. We are getting lovely weather here, so it's important to take advantage of while you can. Get away from the charts. Unwind, right? You can't stay focused and flustered all the time. You need to take a break, because of course then that's where the psychological issues will come through, and the revenge trading and the over trading and so on and so forth. So enjoy your weekend, everyone. Have a great weekend, and we'll see you all next week for another market video.